Hey Internet, this is Jacob Clifford and welcome to my YouTube channel. Economists, policymakers, businesses, investors, individual households, everybody who's been paying attention to the economy at all for the last year and a half have one question. Now I am going to answer this question, but first let me explain how we got here. When the COVID-19 pandemic shut down the US economy, the government passed a massive stimulus bill to support businesses and individuals. And it was paid with borrowed money through deficit spending. The US Treasury borrowed money by issuing bonds which were purchased by commercial banks, pension funds, and other institutions. At the same time, previously issued Treasury bonds were purchased by the US Central Bank, the Federal Reserve. So the Fed put money into the system that was taken out to pay for the stimulus. This is what economists mean when they talk about the central bank printing money. They're not actually printing actual physical dollars. This sounds weird, but this is standard monetary policy. It's exactly what was done during the Great Recession to lower interest rates, increase spending and investment, and to keep the economy afloat. But the difference this time around is the scale. This is the US M1 money supply. Again, some of it is cash, but 90% of it is digital. It's just ones and zeros in people's checking accounts. For the last 20 years, there's been a slow, steady increase in the money supply. But take a look what happened in April of 2020. Even a second grader understands that if you increase the amount of money out there and the number of goods and services stays the same, you're gonna get higher prices. And we have seen prices spike in all sorts of industries like lumber and used cars and home appliances and of course, real estate. But that's not really inflation because inflation is a general increase in prices for almost everything. And we haven't seen a huge drastic increase in prices across the board yet. So what's going on? Well, a recent press release by the Federal Reserve said, the sectors most adversely affected by the pandemic have shown improvement, but have not fully recovered. Inflation has risen, largely reflecting transitory factors. So the Fed's saying that these price spikes are not permanent. They're just short-run effects caused by surges in demand and supply chain problems. But this is where it gets interesting. In the same press release, they said, the committee will aim to achieve inflation moderately above 2% for some time, so inflation averages 2% over time. So according to the Federal Reserve, the United States is going to have more inflation than it did in the past. Yes, we're going to have inflation. The question is, are we going to have uncontrolled inflation or hyperinflation? That all depends on two interconnected things: expectations and the decisions of policymakers. For the first one, put simply, economists don't fear inflation. They fear the fear of inflation.
The only thing we have to fear is fear itself.
When the general public starts to fear and expect inflation, that's when things get out of control. Employees demand higher wages, businesses see their costs go up, and banks charge higher interest rates. And as people expect prices to go up even further, costs go up even more, and it creates a vicious circle that creates more and more inflation. It's the same idea when people expect a recession. If they expect to lose their job, they might spend less, businesses will make less revenue, they'll fire workers or shut down. This causes more people to cut their spending, and the recession gets worse and worse. So if people expect a recession or expect inflation, it becomes a self-fulfilling prophecy. So these statements by the Fed are designed to calm everyone down and say, okay, don't worry, the Fed's got it. But with this much money in the money supply, perhaps no amount of reassurance from the Fed can prevent prices from going up. And that's where policymakers need to step in. If inflation starts to get out of control, there's three things that will likely happen. First, the central bank will stop buying treasury bonds and instead start selling them. This will take money out of the system and increase interest rates, which will decrease spending and cool down the economy. Again, the goal is to fight inflation, but the downside is it could cause a recession and high unemployment. The other two options could be done by Congress. They could increase taxes or they can decrease government spending. But there's probably very little political support for massive tax hikes or huge cuts in government spending.
We need to cut expenditures by 32%.
Let's make it an even 40.
Oh, that's not necessary.
Slash it. Slash it.
So fixing inflation is largely the problem of the Federal Reserve. And it's all going to come down to timing. If they take action too soon, that's going to halt the recovery and lead to a recession and high unemployment. And if they take action too late, after people have already expected prices to go up, they're going to have to drastically increase interest rates to get inflation to fall. And again, that could cause a recession and unemployment. So with all that said, I can finally answer the question, is the United States going to have massive uncontrolled inflation? Well, in my opinion, Probably not. Yes, we are going to have more inflation than we're used to, but if the Fed can come in and slow the economy down at the right time, we won't have uncontrolled massive inflation. But only time will tell, and I'll make more videos like this to give you updates. If you see videos where I'm telling you to go buy gold and real estate and get rid of all your cash as fast as you can, then you know we have a problem with inflation. And I want to know what you think. Let me know in the comments below if you think there's going to be more inflation and what's going to happen with this huge increase in the money supply. Also, if you're an econ student and you need help in your class, take a look at my ultimate review packet. And if you're a teacher, take a look at my econ worksheets. You might want to buy them now just in case prices go up in the future. Thanks for watching. Till next time.